There's something to be said about people starting like with a pre-approval before they go to buy a house, because if there is a credit issue, that the credit can greatly impact the rate. So, if they catch that ahead of time, maybe there's ways we can help them repair the credit. I mean, for instance, I had a client come to me and her credit score was low and she didn't even know it. And there was a small collection out there, a medical collection that she wasn't aware of. She fixed the collection, had them take it off, and her score went up 50 points.
Oh, wow.
So we were able to actually, during the process, re-pull a credit report at the higher credit score, and she was able to get a better rate.
Hello, and thanks for joining us at the Smart Start podcast by the Equitable Bank. My name's Ashley Hess, and I'm a part of our marketing team. And we are joined today by Gary Rieboldt and Cara Reese. Thank you both for joining us today. I'll let you guys introduce yourselves and your positions.
Sure. I'm a loan officer, obviously, and I have been in the industry since 1990. So a lot of years.
Yes, I won't say when I was born. And then Gary, how about you? What's that?
Yes, I've been in the business. Both Cara and I are vice presidents and senior loan officers. I've been in the mortgage business since 76. I started when I was 12, but no.
No, that makes sense. That totally tracks. So to collective, about 86 years of experience between the two of you.
Yeah.
Thank you guys both for that introduction. So today we're talking rates. What are the biggest factors that impact a borrower's rate today? Cara, we'll start with you.
I would say the credit score, the amount of the down payment.
I would say that the biggest thing in the years ago, you didn't have credit scores that you would monitor, and now the rates are really directed by the credit score is the biggest factor. And then it's the down payment, but then you can also, the term of the loan can affect it, because you could have a little bit lower credit score, but a 15-year term versus a 30, so you could get the rate down that way. So there's a variety of different things added into it, where people get off when they start looking at rates and they shop around or they call, is they say, what's the rate today? Well, oh God, there's a lot more to that.
Yeah, one size does not fit all when it comes to interest rate, and that's a big misnomer.
Right, and so you got to kind of get somebody and get comfortable with someone who's a real estate professional in the mortgage industry, and then we can guide them through the rate thing. And a lot of times people chase rates and unnecessarily, because sometimes it's not that important in getting a loan that fits them. So they spend a lot of needless time, but we like to educate them so they understand how interest rates work, the best rate for them in their particular situation, because everyone's unique and they could have it's tailored to their specific needs and stuff. So they really have to do a little bit of homework beforehand. What I don't hate to see, I don't like to see, is someone who just put an offer in, they have a house, what are the rates? And they hadn't thought about any of this stuff and have no idea what they're doing. They just go on people's websites. The good news is, with the technology today, the communication between the lender and the consumer is awesome, but the consumer can go out and shop needlessly and don't know what they're shopping for and don't know all the little nuances that could affect their rate. So they got to have somebody that helps them guide them through that. And I think that's where our bank is really different, in that we really go in relationship type building, where we work with customers, build up a relationship, and spend time showing them how we figure out the rates. Go by the house. The house is the most important thing. A rate's going to be the rate. And, you kind of do this. You marry the house, you date the rate. So maybe you start with a rate at one rate, and then they get their credit scores better over years. They refinance it, and so it's an ongoing process.
There's something to be said about people starting like with a pre-approval before they go to buy a house, because if there is a credit issue, that the credit can greatly impact the rate. So, if they catch that ahead of time, maybe there's ways we can help them repair the credit. I mean, for instance, I had a client come to me and her credit score was low and she didn't even know it. And there was a small collection out there, a medical collection that she wasn't aware of. She fixed the collection, had them take it off, and her score went up 50 points.
Oh, wow.
So we were able to actually, during the process, re-pull a credit report at the higher credit score, and she was able to get a better rate.
Oh, that's awesome.
Yeah.
So from your perspective, and this can be for both of you, what really matters? And you kind of touched on this versus what people assume matters when it comes to rates. So is credit the most important thing? Is it the help? Like, just from your perspective here.
There's so many different things that go into it now that's really hard to pinpoint. Credit is one. Closing date, for instance, could be another one. If they're not closing for 90 days, that greatly impacts what the rate is. So when you're looking at the rate on our website one day, if it's a 90-day close, it's going to be a very different rate. So there's so many, between that, the amount of the down payment, even the loan amount. A smaller loan amount tends to get a better rate. It's just the way it is. Same with loan to value. People think that if you put 20% down, you're going to get a better rate. That's not always the case. So that's why every borrower's scenario is so specific when looking at the rates.
Yeah, what you really want to do is get a relationship with a customer, or the customer wants to get a relationship with a bank that they can rely on talking to somebody. And, it's kind of an interesting thing. I mean, we'll talk to them after hours because that's when they need us, because they're going to be looking at a home. They might want to say, so once they get a relationship with us, we can actually pinpoint exactly what their rate's going to be on that specific day at that specific sale price. If we haven't talked to them before, we'll never get that far. So we like to get the pre-approval going so we just can gather data so we can go through all these little conversations beforehand so that they're not clogging the most important thing to get the offer accepted. And then they won't be shell-shocked as, well, I thought the rate would be great. Well, no, your credit score is such that it affects it negatively, but our solution is doing this and put more down payment or whatever it might be, so that we've had those discussions already, and then they're not disappointed, or we've got a plan of attack. Some people, they'll say, well, I don't, not having a large down payment, that necessarily doesn't make that big of a difference in rates as long as the credit score is decent. And so it's just good to go over all that stuff, because some people would rather have some extra money to save, and they're saying we're putting their last nickel down, and they didn't need to do that. They could have put down 10% instead of 20% maybe, and had a comparable rate. And the PMI today is so low because if their credit scores are good, it's not going to be a big negative, So,
yeah.
But this is a learning process, and that's what I'm trying to make the point. Mm-hmm. You invest some time, get educated, and know what you're talking about with rates. Trust one lender, and don't jump around from lender to lender, because you're going to get people that don't have the time to talk to you, could care less, want to throw a rate out, and they don't. And trust me, it won't be accurate. We can at least work with you and give you something that's accurate, so that it's meaningful, and you're not you're comfortable. We want to. You're nervous. Anybody who's buying a house is going to be nervous. I get nervous buying a car, for crying out loud. So you got to be. What we're trying to make it as seamless as we can for them, from the getting a mortgage standpoint, and being able to say, hey, they're going to figure out the rate for me as close as I can. It's probably going to be like it might be a little bit higher than what they quote on the screen for certain reasons, but they'll know that. So, but you want people to be comfortable, because it is a stressful time. But and timing is the big thing. People want to write an offer on Wednesday night. They don't want to talk to me on Thursday. They want to talk Wednesday night. We got to figure all this stuff out. It'd be nice if we did a little prelim work with them, but if we haven't, we're able to do it. But time is really, in this market, is really important.
Yeah. It's education. A lot of education is what the customer really needs in advance, which is nice, which would be nice, because again, the rates change so dramatically day to day, even sometimes. So if they know that ahead of time and they realize that what you're seeing on the website today is not maybe what's going to happen in 45 days when I get my offer accepted, that goes a long way. Then they can understand and feel more comfortable with, okay, things are changing. It's not, I'm going to one lender this day and one next week, and their rates are so different. It is because the industry and the market is changing.
Yeah, no, and I think that's really great points, because when you realize what your options are, it's like, okay, if I reach a hurdle, like whether it's my credit, whether it's not having the approval or what have you, knowing what tools I have at my disposal is the most important thing. So that education piece is huge. So what do customers or realtors most often misunderstand about rates? And that can be for either of you.
I think a lot of times people feel the lowest rate is the best rate. And that's not always the case, because sometimes, depending again on the institution or the lender that you're going with, that lowest rate could have higher costs. And that might not always make sense in this market, especially if you think maybe you're not going to be in the house for a long period of time, or you might refinance because the rates, are coming down. So I think that's a big misunderstanding too, is that the lowest rate, if I'm just going for the lowest rate, and they don't understand the costs involved in that.
That's a good one.
And I think today, as I said, the technology in this business is great, except that's the scary part, because you can go online to any lender and see their rates, but they don't really, they might say, oh yeah, this is our rate, but we have a $600 application fee added to all these other costs. Oh, where was this? And all of a sudden, that can add up to a cost of stuff. So you want to, I think people sometimes don't really understand what they're looking for. And that's why it's best to hook up with somebody so that we can kind of take them through that, and not just, they click on 3 lenders' sites and say, here's what the rate today is. Well, yeah, that's the rate today. If you have 800 credit scores and a mortgage balance of 200,000 and you go to church all the time or something, But so you want to know how it's going to be when you put in that offer, or as close to it.
Yeah, and the rate on the websites isn't a one size fits all, as we talked about earlier. It's far from that. And again, that's what people don't understand is, well, your rate says this. Why can't I get that rate? Well, it's all these different scenarios like we talked about with credit score, closing date, loan amount. There's so many things that go into that.
Yeah. No, that's awesome. Really good information there. What's something that doesn't impact rates as much as people think?
I really think it's down payment. If a person has a very high credit score, they can come in with a very low down payment, and it's not going to affect them. Or if they have a really high credit score and they put down a ton of money and they expect even a better rate, it doesn't always add up. So I think people get a little bit, it's usually a combination of the things. But again, I don't like to have people spend too much time worrying about that stuff. Just have a general idea, so that they can know what a rate is approximately, and they'll say, well, my credit score is maybe suffering now, but I'm going to be able to put more down payment down. That can help. And then if you could go to a 15-year term versus a 30, if they need to, if that they're able to do that, and that can, that solves a lot of issues. And a lot of times it doesn't make that big of a difference. And the other thing, I think that's the most important, is people say they look at two rates and they go, oh boy, this is going to be a difference. 1/8% in rate is not that big of a difference sometimes, and it's not the end of the world, if you get a little bit higher or something because of just one of these other things that we can't control.
I think another thing that people might not realize coming into it is that your income, what you make, or how much in assets you have in the bank does not affect rate. A lot of people will think that, well, I make X amount of dollars, I'm a good credit risk. That doesn't necessarily equate to what rate you're going to get. I mean, credit score, yes, but not assets and how much you make.
Wow. So like kind of to your point, like that 20% down myth, like you don't have to have 20%.
Well, you really don't. And we're in an interesting time period now. We're the mortgage insurance where you have to, if you don't have 20% down, you have to have mortgage insurance. That was used to be a swear word years ago because it was very costly. And back in the day, in the 70s and 80s, maybe it was quite a bit higher. We're at historic lows with mortgage insurance. And because we're a community bank and we have low defaults, we get a preferred rate from the MI companies because we're a smaller bank that is well operated. We pass that on to the customer. So when I just had one where a guy, he's going to get a mortgage of $477,000. He's got a credit score of 749, and his monthly mortgage insurance, because they're going to put down 10%, is $86 a month. Well, in the yesteryear, it would have been $186, maybe $286. $86, so big deal. So this guy said, "Wait, I'll save my money. I'm going to keep it in the bank." But we had that discussion several weeks ago, so we didn't have to go through that. But that's kind of what we do beforehand, which is kind of cool. But that's education. Yes, we like to see people physically. If in person would be great, but if not, you can do this all over the phone. So you got to invest some time communicating with a mortgage professional. That doesn't mean you have to take off of work necessarily and drive to see somebody face to face, but it's nice to, but you don't have to, and that's when the technology is really helpful. But a person with average intelligence can be very educated in this in a minimal amount of time if they just get with the right people. And that's kind of our philosophy at our bank. We have very experienced loan people, and we have great backup people at our main office with a wealth of experience. So we can really help them structure something that's really very good. And then they don't have to worry about that. They know, okay, this is going to be approximately the rate, and they don't have to jazz around with that. They can go find a house.
It's nice to hear like that you don't need to have that 20%, or like that there's all these myths that you can discredit if you just go reach out to talk to somebody who's knowledgeable on these subjects, which I think is super valuable. So what's one example, and we kind of have talked about this, but what's one real example where someone's situation significantly impacted their name or their rate without names? Gary kind of gave one already. Cara, do you have one?
Oh, there's so many of them. Well, the instance I was talking about with the credit, the collection and fixing. So, I mean, there's so many things that we know about credit reports and credit scores that are helpful to people when they're looking at, well, my credit score on Credit Karma was X, Y, Z. Why is it so much lower? And again, we have to educate, and we can explain to them what it looks like on our end that could help them improve that credit score. So we're going through those scenarios with people all the time. And again, on that one, it was just that small collection that she wasn't even aware of. And she was able to get it taken off and increase her credit score by 50 points before we even closed. So that helped them get a better rate.
Yeah.
And one thing I think people get a little bit, this interest rate stuff, they've put it at the big important thing. Well, it is important. I mean, it's great. Rates were good. The average rate on a 30-year fixed rate since 1971 is 7.71%. So we're giving rates today at 5.875, 6% on a 30-year fixed. You're still getting low. It was during the COVID period that rates went berserkly low, and so it's got everybody, younger people, kind of thinking that's what the rates ought to be. Well, calm down. This is not, so we're in a pretty good spot right now, but the rate is the rate as long as you can afford it, and we make sure of that. But people put so much emphasis on chasing the rate that it's not that.
Well, and you can always refinance
Yeah.
in the end. If rates do drop again, people I think now are starting to realize if I really want the house, this is where the rate is today. Waiting is not going to help your situation. So if you, like he said, marry the house, date the rate, you can always refinance out of that rate at a later time.
Yeah, and that house might not be there. The
Right.
inventory could be gone. So, no, that's great. One really quick last question. What can someone do to pull themselves into a better position for a stronger rate? We've touched on that a little bit, but if you could each just give me one thing, if you had somebody come in to you today, and I know it might change depending on their situation, but one piece of advice you would give someone to improve their situation.
Well, after somebody says, "Well, I'm going to pay off all my bills and it'll be fine," that doesn't. It might take 30 to 60. It might take 1 to 2 cycles of the credit score before it's reflective on your credit score itself. So you're not going to have an instantaneous event happen. So that might be a thing. But I think if you can keep the balances of your credit cards, the percent of credit used down, that really helps a lot. And credit inquiries that are not mortgage, inquiries. Mortgage inquiries don't hurt. But if you're shopping, and getting credit cards and getting new debt all of a sudden, that can have a negative. So try to get, I guess, that stuff taken care of prior to going into it. But I mean, life is life. I mean, people have to live. My car, I needed to buy a new car. What am I supposed to do? Wait to buy the car? No, you had to do that. So what? Your rate might be a little affected. It's not the end of the world. But I think the big thing is that the making people feel comfortable, but really it's nice that we spend time with people and reflect on what to do and give you all these ideas and really help them along quite a bit. But we're not doing that for our health. It's for them. But we'll find that I think our success rate on keeping the customer is in the high 90s. And why is that? Because we have one of the best rates, all the time. So we'll spend time with customers because we know we're going to get them because we have very good rates. So you would hate to have a customer be shopping and talking to me and my rates weren't good. I'd say, you really like my information and we're really nice people and we give you good information, but our rates aren't so good. Well, no, it's just the opposite with us. So you got a nice, the two thing. You're talking with people you're probably going to do business with,
Yeah. No, I think that's a solid piece of advice. I know you said that kind of tied into yours.
Yep,
but
he took those words right out of my mouth.
Oh, I'm
on the
sorry.
same wavelength. It's all that experience just combined
right.
together. Thank you both so much for joining us today on our podcast. And thank you all at home for taking the time to listen. If you would like to learn more, check out our YouTube channel or feel free to connect with us at one of our branches or any of our social media channels. Thanks and see you next time.